Everybody, welcome to episode 149 of the Lumber Word, recording on the 10th of December, 2025. Our guest, recurring guest, Sig Toma. Hey, Sig, why don't you give a little quick background on what you do and all the good stuff?
Yeah, I started in the industry in 1980, believe it or not, at 21% interest rate. So it was kind of a fun time.
So you're a rookie.
Yeah, right. And stayed at a lumber trading company till about 1988, and then went to New York as a fund manager in 1988 till 1993, roughly. Came back, worked for Louisiana Pacific as director of business for OSB, MDF, particle board, and plywood. And then got tired of flying a lot and ended up going back to trading and starting international trading floor for Rainier. That was about, it was 9/11 day almost to the T. It was on the 1st of September, 10 days before 9/11. And then eventually went out on my own and been out on my own ever since. Been trading lumber basically for 40 years.
Matt, did you and Sig meet at Rainier?
Yeah, he hired me.
Yeah.
He stole me away from Forest City.
That's
Those
awesome.
were the days back in 2002.
That's awesome. I like your little moniker or down below on your tuition guy. You must have just wrote in the check for the next semester.
Oh, that's coming up. I already paid for this semester, but sometime in January, you'll just hear a giant sucking sound coming out of my bank account.
Well, listen, Sig, it's good to have you on. I was at the CME Holiday Ag Party last night at Wrigley Field. So Matt called me and said, "Hey, who are we having on?" Right when I don't know if you heard all that noise in the background, Matt, but
yeah,
I was standing there listening to all the young grain traders and everybody else and people walking in with cowboy hats on that must trade cattle and everything. But I was hanging out with my buddy Mike Wisniewski over there, and we even went back and took a crack at the batting cages under the stadium.
So what kind of velocity were they throwing the ball at you there, Ash? I want to know.
I'd like to say like 60 or 70, but it was really the guy would hold the ball up like this and put it in, and it was like poof. And it hurt more to miss the ball than it did to actually make contact. And I walked out of there sweating.
Did you play baseball when you were a kid?
Yeah, I played, but I mean,
Okay.
I thought I could go in there and just rip it, right?
Yeah,
and
no.
You know, that rotation at your age, I'm lucky that you walked into the office today. I mean,
4 a.m.
You could have easily been laid up for a week with a bad back.
Yeah.
4 a.m. got up and took a couple Advil, and that preempted. I don't know if that was from the extra glass of scotch that we had afterwards, or but it was cool. It was good at the CME, and they're excited about the contract. They're really excited about the Southern Pine lumber contract because there's two market makers in there. And I don't know if anybody that trades it have noticed the bid-ask spread is getting really tight, and you could actually get trades off in there. And we've noticed the open interest. I don't know if it's because Greg put a buy on that 3 weeks ago, but ever since you said that, Greg, the Southern Pine open interest has been climbing.
I mean, I did front run it because, like, when Charles and I was talking, I put the buys in and then I did it. So I just want to be full disclosure. That,
You're not allowed to say front run on this when we're talking about commodities.
Oh, not on this podcast. You can't say front run. Okay,
This is not financial advice.
Or I'll put it the way Trump.
Purely for entertainment purposes. We want to make that clear to all of our audience.
The way Trump always does is we probably can't really say front run on this, so we're not going to say front run.
Yeah.
So Ash, we got a heads up on Pine. We don't have our Pine guy on today, but we got some giddy up going on down there.
I mean, when I talk to the consolidated mills in Pine, well, first of all, my first phone call today was from a guy who wanted to know what's going on, listens to the podcast. He felt rudderless and that he needed direction, and the market needed direction. I kind of said what you said. 8 out of 10 years, December kind of sucks anyway, right? But to your point, I mean, let's just go through the markets quick. You want to
before we want to say this, I want to know. I just want to let our listeners know that Ash is a bit of a celebrity. He was went out to Iowa hunting and like what was in some honky tonk, and lumber guys come walking in like, "Hey man, I love the podcast. Keep doing what you're doing." Hi, Ash, tell us about it.
Well, look, so it wasn't. I don't want to say honky tonk because it's a really nice town. It was on the town square in Washington, Iowa. And Dave
My
Mitchell,
bad. Apologies to Freeze.
Dave Mitchell from Engineered Building, who's
Shout out.
is a listener, great guy. Love to talk to him every time I see him, and runs.
I just wish more of our lumber was in his yard.
Runs a great facility down there. Every time I go by it in Washington, he grew from a small place to now like the whole south west corner of Washington, Iowa, basically has lumber coming in and out of, and trusses, and it ships it all over the place. So good guy. And he came up.
Do you have
and
his
said
phone
something.
Number?
So I felt.
Been doing some prospecting lately. It's been slow.
It kind of makes you feel good, but yeah, let's talk about rudderless. Is the market rudderless right now? What are you seeing in different things, Greg? You were. I heard you say to somebody in an up market, we're never going to have enough wood after you were told not to buy a lot more.
Yeah, I mean, this is a time of year that's. And this year is very typical of this time of year, Matt. Yeah, I know you and Sig are going to like come in on this with me. You know, there's a lot of guys that aren't really there. You know, there's some pressure to have inventories lower for year end. There's, hey, we're trying to decide what we're going to do for next year. But mills are very interested in, you know, clearing dressed lumber before year-end shutdowns. And I mean, very often when you're in this market, you know, there's some deeply discounted items that give the appearance that the market's a lot weaker than it may really be. Although, you know, this market doesn't need any appearance to be weaker than it has been, because I think that's part of where everybody is. You know, I'll go back to that whole, you know, recency is for 3 months, we've been expecting mill curtailments to have an impact on the market, and they haven't. And, you know, we're at the lows of the year on most prices right now.
Right. Well, we're at multi-year lows on some things too.
Oh, true that.
You know, 5 to 7 year lows on some items. And, we're in an industry that's facing catastrophe. You know, when you're paying 45 to 55% taxes coming from across the border down here, and then you've got all this new money in the yellow pine game they spent billions of dollars building new sawmills and revamping existing sawmills to get nothing out of it now here 3-4 years later, except for loss. And then you've got demand, you know, muted because of all the things we've been talking about this year and that are seasonal factors that are going on right now. But like, it's hard to sit here and think that this is going to go on forever, because it won't. It feels like it will, right? Like, I mean, if you're a day-to-day cash trader and it's the middle of December and you're more interested in how, you know, Christmas and New Year and the family coming home and all that stuff, you can get distracted pretty easily. But I'm not buying lumber today for tomorrow's, you know, usage. Whatever I buy today is going to be sold in February, probably late January, you know, and I got to start thinking about March. And in my areas that I sell to, that's when things start really ramping up. So the buyer in me is more interested in what the mills have to say these days than the seller in me is to take more shorts or just willy-nilly go out there, see the pants, take orders, and look, that the time for that's over. You know, I mean, it's time to start thinking strategically about the first half of next year.
One thing, Matt, you know, you see different things in markets that maybe make you think you're closer to a bottom than you are when you were the day before. Like, so I won't mention the mill or the species or any of that kind of stuff. I'll just tell you. So last week we had a mill come to us and never sold us before. Actually, I don't think really wanted to sell us before. And this is just the way and they come there with these 20 cars. Do you want them? And at what price? And give us one location. So, and Greg, jump in if I'm wrong. We buy the cars, pretty significant discount to the market. And we want to flip a couple of them. They are not going to let you flip any of them. They got to go to the location you bought at. Or if you give a rate, they won't come back again last night and today. Same deal. You can buy these things to this 1 or 2 locations, but you can't flip anything. It's like, okay. So my first initial reaction is, hey, Greg, we should tell them to off because they should do a way we wants to do it. But like, in his wisdom said, why would we do that when we can buy it really cheap and take advantage of this? And those are that's one of the things I see when that mill runs out of their traditional customers, or maybe can't go out and find it, and they're going out and finding ways to move big chunks of lumber quietly, right? And when I say big chunks quietly, I'm talking 20, 30, 40, 50 under quote unquote print prices, right?
Yeah, I mean, that kind of stuff happens, right?
Yeah.
It's interesting how the behavior of people that have multi-billion-dollar investments, the behavior, actually, you come from an industry also that was rather large, and the lumber business is rather large. And I look at mills, why don't you behave like a gas station? Because you are a gas station. You have premium that goes to the home centers, and then you have unleaded that goes to the Geo Metro guy, okay? So why are they so systematically programmed that they need to know where their lumber is going? When it is an outright commodity and the price is determined by how much is being made and how much is being used. It kind of blows me away. Honestly, if I had a sawmill tomorrow, I'd say, who's paying me the most? I don't care where it goes.
Yeah, those days are over, Sig.
Right?
No, but historically, if you look at North American mills, the mills that have historically generated the best mill net are the ones that sell to whoever's paying the most money today for that commodity product.
Thank you.
Because in any market, there's different segments are paying more than others. There's a time and a place where the end user's paying the most. There's a time and a place when distribution's paying the most. There's a time and a place when the brokerage community is paying the most, right? So, if your job is, what's the number one job of a sawmill, Matt?
Turn their logs into cash.
A sawmill salesman.
There's 3 guys that kill you.
Get the highest dollar for the product.
No, it's to make it go away. The number one job, if you're mill sales, make it go away. Like the number one job of a retail lumber buyer, don't run out.
So what's changed in the market though, in my career, really the last 25 years, where 25 years ago, I could buy chunks of lumber from everybody, right? I mean, there were some mills that had really stringent rules, but not very many. Most mills were wide open, laissez-faire capitalist, open market. There was lots of different mills to talk to. And now all that's been consolidated into, 20 sawmills. And those 20 sawmills have a lot of different customer channels that they like to look at their, I always call them logistics companies. They stop becoming sales companies. They start becoming logistics companies. They're like, okay, where's this lumber going to flow to? They're not even thinking about sales prices anymore because a lot of the stuff's contracted or VMI'd. And so their open market discovery rate has gone way down. And, 9 months out of 10, that works for them. It's the 1 month out of 10 that they have to come to you and go, hey, we want to bury these 20 cars at minus 30. Look, I had the same thing happen to me in the last 3 days, dude. I've done a large chunk of lumber with one particular sawmill. I'm not going to name any names because I don't want to embarrass anyone, but same situation. They're like, we want to move this stuff. They see me as a guy that can get it out of their backyard and get it away from their home market and then just be gone with it, right? So that's another thing that mills do is they start looking at, again, logistics. Like, well, who can we sell this to that will take this lumber out of our backyard? So we can tell our local guys that we're getting higher numbers or we're off the market or whatever. So that kind of stuff's going on right now also. But I do believe in my heart of hearts that, we have the same conversation in 4 weeks. None of that will be happening.
Hey,
It'll all be over.
Who wants to have a kick at the cat at this one?
I do, because you're not competing against your own wood. You're competing in the
All wood.
You're competing entire industry against all wood. It's not the wholesaler's wood that you're competing with. Your customer will play that leverage and say, hey, so-and-so called me, has your wood, and he's offering $20 cheaper than what you're asking. But that's not a competition. That's
the market is the market.
Yeah, exactly.
I mean, you can fix that. You can fix that by just telling them, give me a destination within like 48 hours of buying it. And then, okay, they can't sit on the wood for 3 weeks. They've got it. The mill can ship it next week if they want to. Just make some rules up.
That's one of the things that's affecting the market today. I mean, the speculation at the mill level is much lower because most mills are selling what they have on the floor to load.
Yeah.
Right. And so, when a mill has a 3-week shipping file, then it's much easier for people to buy that wood and, they hold it for 2 weeks.
They play the market. Yeah.
Right.
Well, look at the person you're selling to is absorbing that risk too. So if the market goes down, can they give it back to you? No.
Right.
I mean, it's like
it works both ways.
My buddy that is a corn.
They never talk about that.
My buddy that's a grain farmer. He doesn't care if a wholesaler pulls up with a truck to unload his grain at his elevator, or if a farmer down the street wants it, or a person feeding hogs. He wants the best price for it on a daily. It's a commodity.
Right.
And I think sometimes people think because their paper is on it, it's special.
Yes.
Or our group of sales guys sitting on our floor are better than that other groups. And we're all selling corn. Some corn's better. Some goes to Gasohol. Some goes to is organic and goes to organic Doritos if they make those. But
I don't think they do that, Ash.
Yeah, they may not.
I
had some Doritos in a green bag the other day with the pickle flavor, and they about lit me up. They were good though. So I appreciate Timber Ghost 1430 saying that, because I think we've had this conversation for years. Some people don't want to hey, some wholesalers may abuse it when they have a Desta and they don't give it and they just sit on it and they ghost you and they disappear from phone calls. That's a different story, right? But I think overall, Greg, you hit it. I mean, we remember the big Western mill that used to get the best return, and then they went to the 3-tier selling where they all of a sudden, don't want to sell wholesalers last. But I always go by the rule: when do you want to buy from somebody? When they want to sell you. That's when you get the best deals, right? When they don't want to sell you, that's a natural governor to say that maybe it's near the top of the market.
I think the job of the wholesaler today is to differentiate yourself from your competition with what you can provide to the sawmill.
Yeah.
And give them a reason to want to sell you, right? I mean, there's mills that want to sell me certain things because they know that I'm good at it, or they know I've got a place to put it in a reload, or they know that Hampton has a program they might maybe tap into or something. Who knows? I mean, but I've earned that right. So, and that's been for consistent behavior and performance by being a person. And I've said this many, many times on this pod that, the only thing that matters at the very end of the day is your character and your reputation in this business. And you need to protect that at all costs, right? So be a man of your word, do what you say you're going to do, and have people trust you. And then all good things will come from that, right? It's like, seriously, best advice I could give anyone in life and in business. But once you've established that you're a trustworthy entity and that you're a man of your word, now you got to go perform. You've got to figure out, what can I do for this mill to make them happy? And then do it again and again and again and become part of their business strategy, right? Eventually you worm your way into, I'm part of their business. That's what you need to do as a trader to differentiate yourself from just some guy picking up the phone going, I'm looking for this truck of 16s. Well, you and 37 other guys are looking for the same truck of 16s. I want to deal with the guy that's going to get me the order on the truck of 16s and has real-time information and knows what he's talking about. So anyway, there's my 5-second rant.
Matt, what do you, what's your sense on what you've seen so far this week on position buying for Q1? And tell me about the U.S. West market. I saw midweek prices on the publication, higher on the hems and down on the green.
We're actually busier on green than we are on hem. So yeah, maybe that's not really telling you the whole story. It's kind of the opposite of what you read.
You're going misdirection on me. Okay, I like it.
Part of the it's a 180 from what you just said. You need to clarify the next question, which is what about first quarter? What exactly are you asking me about first quarter?
How much of the customer base do you think has decided to buy more lumber, and get a little bit of a leg on the first quarter? I mean, here we are. Next week is basically the last week of the year. The last 2 weeks are nothing. We come back January 5th and we go to historically the lowest production quarter of the year. I don't know what the weather's like out there, but we've already had more winter in the Midwest than we have in the last several years. And, winter does come every year.
Yeah. So from where I sit, my bread and butter contractor yard type customers they're not expecting anything really significantly different from like 2025. A few of them have expressed to me that they're a little bit concerned about supply going into the first half of the year because of curtailment possibilities. And they're not sure how that's going to impact their ability to buy the things that they want to buy when they actually care. Nobody cares right now. It's winter. But you will care in March or April or May. And so I've had a couple of discussions like that where guys are maybe more bullish if you get them to think out further ahead. And then I've had people that have like canceled their contracts for 2026, and they're just going the opposite direction. They're like pulling in. They're turtling up. So I don't think there's really one overall trend other than more of the same. Okay, so if we know that demand and attitudes are going to be similar going forward to what we've just been through the last 6 months, then what's going to change?
How long can
seriously, like do the math, like go through it.
Continue to fund the losses that they're enduring?
That's the thing that's going to change.
Yeah,
that's the point I was trying to make.
Yeah, I mean, I'm saying how long is I mean, if we roll into January and prices haven't moved and they're still at these prices, I mean, like, how long?
Greg, we were talking to that European mill yesterday, and we had the conversation. Some of the Eastern mills told us they're operating because of their fixed cost position, right? They're basically just you're basically thinking, if I shut down now, my asset depreciates in value, my sawmill, because it's not running. I've got bank covenants with my bank that I have to have a running asset. And SIG, we talk about this a lot, and I do it with you. Like, what's your thought on the mills running because they got to have that cash flow?
Yeah, there's, probably 10 items. Number one, you're absolutely correct. Number two is you got to service your debt. You can't service your debt if you don't have any receivables, right? Yes, you still incur losses, but you're still operating. And then you call the bank. So you owe the bank $200 million, say, look, I need to stop on interest payments and I need potentially a haircut in the future on my debt, because otherwise I won't be around and the bank's going to start listening to you and probably come visit you. So, those are three factors. Then you got the log purchase side. Some people, like some large corporations that make lumber, have $50 to $100 million tied up in their log inventory. They do go bad in 6 months, right? So if you shut down, you better be very low on logs. And don't forget, they've committed to log purchases 6 months, 9 months, a year ahead with governments or private entities, right? So again, I don't want to bore and go into deeper than that. Then there's the labor pool, and there's your energy contracts, your byproduct contracts. It just goes. That's why you
It's
can't
messy.
say, a certain number is a shutdown number. No, there's so many other factors.
Yeah.
Yeah,
So
it's extremely messy, Ashley. There's
Yeah.
I
and then
agree.
you're talking about like, hundreds of families being affected and right around the holidays. It's like these are all bad mojo type of things that you don't really want to talk about, right? But the fact that we are even talking about it just tells you the state of the market, where we are right now at the end of 2025, and the losses that are in front of us that are just staggering to imagine with the tariffs and the ADD and the CBD. So, look, is lumber going to stay at sub $500 Chicago forever? Probably not. I mean, just based on my experience, that things that can't go on forever won't.
If I could spend 2 minutes just to kind of give your listeners and your viewers a little bit of a macro change that's going on, and I'm not preaching any kind of bullish or bearishness here. I'm just bringing out some thoughts. If you guys want me to do that, I'd be glad to do that.
For sure. Absolutely.
Okay, so we have 600,000 new millionaires, thank you to AI. United States probably has 500,000 new millionaires. The fund managers are giving presentations, and I've participated, to a lot of board of directors who they need to purchase. You saw Home Depot, Lowe's go out and buy pool accessory companies like SRS. You saw Lowe's buy sheetrock companies, roofers. A roofer sold in Phoenix for $800 million, got bought by Build Corp, and he's only a local roofer in the Phoenix area. So the high margin businesses are getting picked up by other companies that are financially strong. It's not happening on the manufacturing side. And those presentations that they've given us in these board meetings, and one was on an advisory board for a large fund manager, and the other one was something I'm on the board of directors on. And they're all saying that 2026 is the year of the complete turnaround in the building industry. And obviously, they have their reasons. Number one, Fannie Mae, Freddie Mac. We're going to change the discount or the premium from the 10-year yield to the 30-year fixed mortgage rate, which is at 2.2% today. They're going to lower that to probably 1 point. So you're going to have 5.25%, 5.5% mortgages from private entities that purchase 10, 15, 20% of Fannie Mae and Freddie Mac. Now, is that guaranteed yet? No. While they're trying to roll it out, yes. The other part is we really have to start hammering away on the local county property tax people. They're killing us. So these are local municipalities in every state. Denton County is the worst in Texas. He's number one violator. He's being sued for about $7 billion by a Canadian developer because he showed them how overvaluing they are the houses, and therefore they get more money, right? Real simple. So those things are a big deal going forward. I feel that's positive. At the same time, we've seen lower rates, obviously 1 full point. We have roughly 60 million Gen Zs and millennials that do not have a home. I'm not saying they're going to buy one, but it's a heck of a pool to sell homes to eventually. And then also, the affordability index, I see it really bottoming. It's starting to turn. Insurances are lower than they were. Car insurance is lower than they were. My car insurance guy said you get a 13% discount next quarter. And I was like, oh, how much money am I leaving on the table?
Yeah.
13%. I'm going to go shopping, right?
That's
I went to Geico and I saved.
Yeah. I mean, when they do it preemptively, Sig, it means that they're hiding a crime.
And yeah, exactly. Well said, Matt. Yeah. So I just want to point some of those things out. The route to market from the realtor to the closing cost and the title company, a lot of that stuff's going to get eliminated. The title companies might not be around once Fannie Mae, Freddie Mac roll out because they're going to do all that work. And AI is going to do a lot of that work. So we're going to cut out a lot of middlemen in the house transaction business, we'll call it, right? So that's also a cost savings down the
I mean,
road.
so you bring a good point. I mean, we've had guests on, prior that, talked about, part of the affordability issue is how much, the regulations are depending on what your municipality is.
All the friction.
In terms of, being able to build and, on all level, and then just the whole level of all levels of government. Ash and I both resemble that the local real estate tax. Guys around here gotten hammered last year at like 30 and 40% increase.
100%.
Yeah, you're the outlier on the average.
I'm paying for. I'm kind of helping to pay for Cook County's great,
whatever.
Everything. Yeah.
There's also,
Can you appeal it?
Yes, I did.
Yeah,
And they saved me. I think I got 99% now increase.
last couple of points I have on this whole saga here is trying to remember it now. Oops, I lost my thought. Then I let
We're getting
old.
Whoa. Senior moment. Attaboy, Sig.
Yeah.
Get the ginkgo out. Take some ginkgo.
I punked the announcer.
But
that's okay.
Hey, Sig, what you said there at the beginning, and we were talking about with data centers.
Oh yeah, I got it. Wait, I got to interrupt.
Go ahead.
I got it. OPEC. We have an OPEC scenario. So if you looked at last Thursday, Hovnanian the builder announced their earnings. They used to make $12 a share. They came out at 51 cents. They're dying because they still want 24% margin, which is stupid. Compared to Lennar, Buffett put in $18 billion into Lennar last week, and Lennar has dropped their margin to 14%. And Lennar is having record sales as far as their company goes.
So what do you remember the long-term average margin for home building was? Because I have a number that
10, 12,
exactly. That's what it was.
Right.
And
well, don't forget, Microsoft only makes 18, but somehow the builder thinks he should make 24.
Yeah, that's a crazy statistic or crazy number.
It ballooned up so much during COVID, and they just don't want to give that back.
Right.
But the long term, it's like, hey, it's a 10 or 12% business. So,
yes.
Well, maybe this is their thought though. I mean, I'm thinking out with what my previous thought was, and Sig, you maybe okay. So I was listening to a podcast on the way home from Iowa last week, and they said in China somebody's building a 50 square mile factory. I'm like, holy shit! And the whole point of the thing is, everything in the world now is becoming big construction and big business, consolidation, everything. And look, I know how hard it is to get a plumber, anybody at my house, and pay something that used to cost $150 is now $1,500. And just bit of advice, when a guy from any type of service comes into your house carrying a tablet PC, punching numbers on it, you're going to get effed by them because they have a whole model. I don't care if they're an exterminator, a plumber, an electrician, but to your point, these home builders are bigger. They've chewed up all the smaller home builders. They're chewing up the trades. We got the build to rent. I think their theory is if we get so big, there's not going to be any of the small people out there to do it cheaper than us.
Of course. Yes, that's exactly what's happening. They're 49% of the market now, the publicly traded builders. But the breakthrough really is Lennar, right? And that's why Buffett went with Lennar and said, I'm going to put $18 billion into your company because you're doing the right thing. You're lowering your price and you're selling homes while everybody else sits and doesn't sell homes. I just 3.75% 5-year ARMs or whatever you want to call them, right?
I just want to give a shout out that one of our previous employees at the old company has a big job over at Lennar's and it is really driving a lot of their value right now. So
he's a sharp cookie too.
Shout out to B, huh?
Yeah.
Big B and his 4 kids.
Here's the thing. Like we were talking about this, and when you look at the construction spending and how much money is being spent on data centers, energy production, new big plant and equipment for, you name it, pharmaceuticals, automobiles, LNG terminals, big, these are all huge, big projects. And, which is all great for those local economies and et cetera, et cetera. But that's a lot of money that's allocated in kind of specific areas. Does that pull away from some other areas at all? That's a kind of a question.
I mean, what would it pull away from?
I mean, residential construction,
I mean, residential construction is being limited by economics. It's just we're in.
I just want to point out this person's handle, Joe Mama 69, Joe Mama.
Well, that industry hasn't gone. That industry he's representing hasn't gone that way.
Yeah. No, I mean, but there is a lot of money sloshing around out there in the United States right now in terms of, like, say, the chip business or LNG or some of these other agricultural products. Yeah, there's things that are doing just fine, if not improving. We've had Rob Cross from FC Stone on the show before, and I talked to him. He's my futures guy, and I talk to him pretty regularly. And
shout out to Rob.
He is, yesterday we were talking, and he's kind of like a lot more bullish about 2026 on an economic macro level than even I am. And I'm not like a Super Bowl, but I just think things are going to be quietly better than people expect. There is a lot of good things happening right now. Sig touched on a couple things with lower costs of living. There's some of your day-to-day things are going. I can tell you one thing: tuition costs have never been more competitive than they are right now, and they're going to get even more competitive because colleges, the deal's up. Like, unless you're prestigious like Stanford, Harvard, and even them, they've got to compete now. What is a college degree worth to a young person in 2026 compared to 1996? Pennies on the dollar, right? Your plumber can make $200,000 a year with 3 years of experience.
All depends on what your major is. If you're in STEM, then it's worth a lot.
No, I'm just saying as a general rule of thumb.
But if you're in this, I don't want anyone to misconstrue and take this the wrong way.
Right.
If you're in gender studies,
maybe not.
It's hard to get the payoff.
I mean,
from that.
I just think let's just go back to like a standard business degree. Okay, like a pretty common thing. You graduate high school and go get a business degree at your state college, and then go to work for somebody. That used to be kind of how it worked. And companies wanted to hire you because you had a business degree. It just meant that you were trainable. And nowadays, half the guys with a business degree end up working in some other industry that they didn't even need to go to college for, and they get saddled with $50,000 to $100,000 debt or more. That's not a very good way to start your life. And a lot of young people have figured that out. And so these colleges, I'm completely on a tangent here, but these colleges have now, like, they have a sticker price. They're like used car salesmen. We're $80,000 a year, and then you end up paying $40,000 a year.
So can I go on my rant about student loan debt?
Greg, to your point,
let's do it, Greg.
I was listening to something about it, like back to degrees that are tough, right? If you're in the arts, right? Like, and I heard this isn't my idea. You're a professor. You can argue about what Shakespeare meant during one of his, what are they, plays? Shakespeare wrote?
Yeah, sonnet. Yeah,
sonnet. Okay. And you can, and nobody's going to get hurt.
I actually didn't take the course, so you can see that, right?
I took arts and man, but I had the test file, I think. So the point is, you can argue all that shit and it doesn't hurt anybody. But if you're in mathematics or medical degrees or something where, you may want to discuss how to do a lobotomy or how to do a brain surgery, but there's pretty much a simple right and a wrong to it that you got to learn how to do it, right? So, like, back to the point of there's certain degrees that are worth money, and there's certain degrees that, it's great. You can sit around what's on the New York Times bestseller list, and is that really worth paying $200,000 a year to go get?
No.
Well, but I guess circling back around. I want to talk a little bit about about the futures market And one of the things that we're seeing today is that, if you are confused about what's going on and what might happen and what might not happen, here's a great opportunity for you. Okay, now we're going to go behind the paywall. Oh no. So,
the champagne room.
You can buy lumber today. You can buy the deliverable product and sell it in January and lock in $50 1,000. You can sell it in March and lock in $80 1,000. There are at least a dozen to 15 items that are another $30 to $100 undervalued to the hedge,
which means
you can buy right now. And so I say, self, if I had no position at all and I didn't think anything and I didn't want to take any risk, what would I do? Oh, I'd buy all that stuff up, sell the board, and enjoy the holidays with my family and come back in January and start figuring out how to monetize that.
I have a question. Is 2x4 14s and 2x6 14s on the list of undervalued items in your world?
Oh yeah.
2x6
2x4 14s way better than 2x6 because a better liquidity item in our world, Matt, but they're both stupid cheap.
Yeah.
12's the worst.
Yeah,
12s are 10s are great. 8s, 10s, 12s, 14s, and 4-inch, all great. 16s are overvalued, but I think they're going to continue to be overvalued based on the conversation Ashley and I had with 2 European producers yesterday. The amount of wood that's coming, I mean, there's not that much wood coming in the first quarter at these levels. Not going to happen. I mean,
hey Sig, you've got I want to switch gears just slightly here because you used to be in charge of OSB at Louisiana Pacific, right? Years ago.
Right. Yeah. Yes.
Great switch,
So,
Matt.
Fraser just announced they're shutting down the high level mill, and apparently it's a monster. You know anything about that? And you want to talk about
first of all, it
OSB?
is correct. Yes. They did shut it down. Matt, one of the big factors that people don't realize on an average everyday business environment is that your OSB production is super intense on natural gas. Natural gas just went from $1.70 to $5. So, your production cost has increased dramatically. You have a 10% duty on OSB coming to the United States, and therefore it just doesn't work anymore.
It's not exempt.
The losses are dramatic.
I thought that they might be exempt when they announced the tariffs on. So OSB is not exempt.
But look, they're shut down, right?
Yeah.
So, case in point.
No, I mean, what do you see as the future of OSB? It's like because
we got some mills coming online. So I think the future of OSB is limited to the upside. However, I think we're bottoming. I don't think there's any more to be had to the downside. However, the upside is pretty limited based on new production coming.
So you feel the same way about lumber?
The reports of this.
No, I don't feel that way about lumber at all. No, I think lumber. We've been doing futures for 40 years. When does the lumber market bottom? Every time futures is at a premium at the bottom. When does the lumber market top? Every time futures at a discount to the top, meaning a discount to cash, right? So we're at a premium to cash. We're slowly turning.
Yeah.
But Matt, when you think about $80 to March today on the contract grade, forget about like the undervalued stuff. I mean, you think about what kind of cash rally you're going to have to get to that, or are you just going to be collecting that premium? Right?
I'm not quite yet interested in selling the $50 to $80 premium just because
you're a cowboy.
I think there's a little bit more upside in futures specifically. I'm not going to talk about cash. I'm just talking about futures. And so I see a roll coming. I see there's going to be, of the next 3 weeks of production, there's really only going to be 1 week worth of production for the mills to mess around with. The other 2 weeks, the holidays like on a Wednesday, Thursday. So you're you're going to lose basically those 2 weeks of production for almost all the mills in North America. They might run Monday, Tuesday, and then just shut down for 10 days in a row.
Do you think I could lose? Do you think I could lose $100 being short March at 580?
Yes, absolutely.
God, Ashley, you know how good that would be?
Yeah, because you'd probably make 200 on the cash. So, yeah, I think you'd be okay. But yeah, I mean, I'm not. I look at futures strictly as a hedge. I mean, I'm really 90% of what I'm looking at is as a hedge. And I'd rather just be naked long on undervalued items right now than hedge them. I'd rather just go out and be a sniper, buy the cheap stuff, things that I know that I can turn, things that are liquid in my inventory, and dabble in some of these like I wouldn't go out and buy 20 cars at 2x6 14s right now. But if I bought a couple cars, that's not gonna kill me. I could squeeze those in somewhere. I've been buying a lot of 2x4 20s lately, just because there's a lot of them and they're cheap. So, things like that. Hell, I've been cutting 20s back to 16s, and I end up with 4-footers. You guys want to buy some 4s? I got trucks of 4s. I'll sell you. It's like there's all kinds of weird stuff going on right now. But I'd rather just be naked long at this point in the market. We're at multi-year lows on a lot of items, like not multi-week lows, multi-year lows. And the sailor and the gambler in you just has to throw down his wallet on the table once in a while and say, "Fuck it, I want to be long." Okay,
we're gonna have to edit that out. I'm sorry.
That's fine.
I hear what you're saying. I hear what you're saying, Matt. And I just like some of these items, when you look at the basis, have 20% potential margin in them with being hedged. So what I always look at is what do I historically make on all the stuff when I'm wildly speculative. Do I make 20%? Maybe I make 50%. I don't know. But like 20% is pretty good.
Yeah, you can't turn that down. Yeah.
Yeah, I mean, it's almost like I see it. Hey, we're not 100% hedged, so we are speculative. We are long on stuff also. But man, when that thing gives you that, it's like I have a question that came up, and it always comes up. We talk contracts. Okay, let's just speak in big terms here. This is from a distribution wholesale side. What we do. This isn't what Sig, Matt, Greg. If you had to pick one thing that you had to do between a mill came to you and said, you need to do a contract with us for a couple cars a month of this based on print plus, whatever, or you got to do a VMI with us, what would you do?
VMI.
I mean, the VMIs are more favorable for the customer because you have min maxes and stuff like that. There's a little more flexibility built into it.
Yeah, I 100% I'd do a VMI. I mean,
OPM.
I mean, why would people want to do more contracts right now? Is it just like, why would you want to do contracts on just random links, any kind of dimensional stuff with anybody else?
The only reason that I ever personally want to do contracts is for items that are not easily bought. So you might want to be contracted on a name brand stud or on some particular type of low grade lumber that nobody's making on purpose.
Anything value added.
I could see that.
Something that's a non-standard type of like a niche-y type product, then yeah, I wouldn't mind having some contracts on that. If it's just 2x4, 2 and butt or something.
No way.
I mean, unless you're specifically trying to get a certain mill stock, then there's really no reason in my mind.
But a VMI, look, a VMI is a term that, or an acronym, is that right? That you don't know what all the details are on some of these VMIs. There's probably 100 different ways people do them. But if somebody came to me and said, I do a VMI with you, is lumber's going to sit in your yard. Whenever you consume it, we're going to do it based on print for that week. And if you don't consume it any week, we're not going to bill you for anything. Can I game that and just buy it whenever I feel
That's why you have min maxes. So, the biggest game in town is when you in a down market and, all of a sudden all your VMI inventory just gets sucked up in 1 week. And then you go up to all time highs and none of your wood gets sucked out of the VMI.
Yeah.
So you have to have weekly or monthly min maxes, and it just means that whoever the customer has got to take a minimum volume per week, no matter what.
Okay.
And then there's a maximum for the opposite reason so that you can't take advantage of oh, I need all these 8 cars now because you're locking in like, a quarterly low price. That's not fair to the vendor either. So you just have to structure it in that way. If you don't structure it in that way, then people will have the ability to take advantage of you. Not saying they will, but they would have the ability to.
No, human nature is everybody, when money is involved in profit and loss, you figure out the best way to game anything that you possibly can. It's like kicking a field goal with the spread where there's only 2 seconds left and you're going to lose anyway, right?
What were you saying, Greg? Did Greg freeze up?
He either that or he's doing a great Mr. Roboto over there.
I think we lost him.
Yeah, he froze up.
Didn't you get him new internet?
Yeah, but who knows what's going on?
Yeah.
But no, I just thought that was interesting on the. Let me just pop him on and off here to make sure he comes back on.
And also, Matt, to go back to the OSB just real quick, your break even roughly in the United States is 180. We're trading as low as 130, and then also the increase in the natural gas prices probably drive it to 195, 192. And that's just a break even without any finance cost. That's just a cash break even net number, right? So they're losing right now $60 1,000, $70 1,000 for every car they ship.
Is there a bunch of new production in the United States on OSB over the last 5-6 years? Is that what has caused this, or is there more European stuff coming in? I mean,
more European stuff coming in, or did, not right now, but it did. And then also, you have a few closures. Cordele, Georgia, which is an old International Paper OSB mill that closed, and then one other one, Arbac, closed up in Canada as well. So you have some reduced production. Lumber's in better shape than OSB is if we have an increase in housing.
So Matt, Sig, Greg, welcome back. We lost.
Yeah, I don't know what happened. My computer just decided to restart and do an update.
So my question. So I think you asked Matt, what is OSB going to do? And kind of I saw this on pulp and paper back in the day when I was looking at that. What I think it's going to do is it's going to go to quarterly or 6 months contracts with people where it'll trade. They'll be like, let's do this print plus or minus this for the whole quarter. I mean, I'm guessing, Sig, if you gave OSB mills the right number, they'd probably, and I'm not even talking significantly higher, they'd probably sell you firm for 6 months right now.
Yes, they would.
I mean, if anybody wants to go out and lock in stuff, they could probably go to OSB providers, and hell, it probably is already being done.
I mean, 6 months is probably reaching it, but 2 to 3 months is definitely in the cards.
Well, one of the things that's happened over the last several months is there's been like one big guy after another has bought, the 500 to 1,000 trucks and put, multi-months worth of inventory in, and so.
But are they receiving it now, Greg, or are they taking it over a scheduled period of time?
It's all shipping into warehouses or into yards, and they're just saying, hey, at $130 southeast. I mean, it's like it's great. It's that's what is that, like $3,400 a truck? I mean, yeah, let's like.
Well, it's a 30-year low,
right? I mean,
that's a 30-year low. Yeah.
We got the advantage, as Sig pointed out. I mean, the Fed's going to come out in an hour and cut short-term rates. There's things that are going to happen that are going to lower long-term rates. I guess when I listen to what you went through, Sig, my conclusion is if I think about the general expectation of the industry, that we deal in, it's fairly negative right now, and that the surprise would be that things were better than people expect. Versus last year, I felt like everybody thought things were going to be a lot better in 2025, and they disappointed.
I would agree with that. And based on the large money, giving presentations to people to buy companies for hundreds of millions of dollars, kind of tells you, of course, they get a commission for that, so that's why they're proactive. However, they weren't proactive last year in December. You know, they didn't come to us and say, "Oh, this is the time. You got to do it now." They did this year. I mean, this last month. So, you know, the heat is on, but not on the manufacturing side, right? Because the manufacturing side is capital intense, and they want better returns than putting up 100 million and only getting 5 million a year. It's too much of a spread.
Yeah. Yep, that's for sure. So Ashley, I'm curious, going back to your question, what was the impetus for asking about VMIs versus contracts?
So it's interesting. I was reading Random Lengths Friday, I think it was, and something came up about how OSB mills are somebody we got something how OSB mills were looking to get more looking to put more contracts on. And then a buddy of mine from a mill was in town the other day, and he wanted me to put on contracts. And what I told him was, you know, part of being a trader is you need to be bidding mills every day to find out what the cash market is. And if I get a contract, I'm losing that edge on price discovery, right? And I mean, could be wrong, could be right. And then we talked about VMI, and I'm like, well, VMI would make more sense because then I have certain things of wood there all the time. And if I sense the market is moving, I can lay into it. If it's not, I'll take the minimum. And, you know, it started me thinking of why would I want a contract? Besides the fact that it gets you closer to a mill because you're making a commitment, right? It's like putting your ring.
That's the other thing. Yeah. Now you're viewed differently by that sawmill.
Yeah. So, and I get that, right? And I understand that too. So I'm trying to figure out, I'm trying to figure out what, here, let me get Greg back on. I'm trying to figure out what would, that was the impetus for that was I was trying to figure out what, if I was going to do something, would it be a VMI or a contract, and just a print-based contract for what we do as wholesale distributors absolutely makes no sense to me, just from the pure financial perspective.
It only makes sense if you've got a niche.
Quarter point, by the way, guys.
What's
that?
Did.
Yeah.
Fed cut a quarter.
That's awesome. I mean, we'll take what we can get, right?
Yeah.
So we're all looking forward to 2026 because we're at multi-year lows on a lot of key items that we trade and that we're aware of. We've got some slightly better financial conditions that we think are going to materialize in 2026. And we think that as a group, it sounds like we think that there's going to be more cuts in production. And so that's just going to tip the supply demand equilibrium back towards neutral, or maybe even in favor of demand for a time. Wouldn't that be nice? Wouldn't that be a nice Christmas present?
Yeah, it would be.
Would it be nice to trade lumber that starts with a 7 instead of a 4?
As always, best wishes on a happy.
Are we going next week?
What is next week?
I think next week's the last week of the year for us, right, Ash?
Yeah, we'll do.
Yeah, and then we're going to be, because I'm going to be out of town for like 2 weeks, so I'll be skiing.
Yeah, we're off. We'll be off the 23rd and the 30th for sure, right, Ash?
Yeah, I think so.
Yep.
Sig, thanks for joining us.
Appreciate it, Sig.
Oh yeah, thanks. Always great to see you guys and to hash it all through.
Yeah,
and thanks for that insight, Sig. I mean, I think that was really good stuff. Really good stuff.
My goal is always to bring something so your listeners have something, you know, to wait with the saying there is a thing going on.
It was great.
Right on. All right. Cheers.